Hey there, wealth builders. Welcome back to the Success Blueprints TV channel, where we give you the tools to make smarter investment decisions and grow your financial future. If you watched our last video, Stop Losing Money, and learn the shocking truth about gold investment, you already know the pitfalls to avoid. Today, we're taking it a step further by uncovering the most effective strategies to maximize your gold investment returns. Let's turn those golden dreams into reality. Before we get started, make sure to hit that like button and subscribe to the channel for more actionable investment insights. Let's dive in. Alright, so you're ready to start investing in gold. Or maybe you already have some, but you're looking to step up your game. The first strategy to consider is diversification. Diversifying within your gold holdings is crucial for managing risk and maximizing returns. Physical gold is like holding the ultimate cash, tangible and a great hedge against inflation. However, it doesn't generate passive income and can be a pain to store securely. That's where paper gold comes in. Paper gold refers to investments that track the price of gold without holding the physical metal. Think of gold ETFs, exchange-traded funds that invest in gold bullion. They offer a convenient way to invest in gold with lower transaction costs. Plus, they trade on stock exchanges, so they're just as liquid as any other stock in your portfolio. Then you've got gold mining stocks. Instead of directly tracking the price of gold, you're investing in the companies that mine the gold. This can be more volatile but offers the potential for higher returns. Investing in gold mining stocks means you're betting on the success of the mining companies. For a more hands-off approach, consider gold mutual funds. These are professionally managed funds that invest in a basket of gold-related assets. Diversification spreads your risk and maximizes your opportunities for profit by holding a variety of gold investments. You can balance the potential for growth with the need for stability. That's the power of diversification. Remember, in the world of investing, balance is key. Whether you're just starting out or looking to enhance your portfolio, diversifying your gold holdings can provide a solid foundation for your investment strategy. So, take the time to explore different types of gold investments and find the right mix that suits your financial goals. With a well-diversified gold portfolio, you can enjoy the benefits of both stability and growth. Diversification spreads your risk and maximizes your opportunities for profit. That's the power of diversification. Remember, in the world of investing, balance is key. Now let's talk about timing the market. It's a topic that has intrigued investors for decades. Everyone says you can't time the market, and for the most part that's true. The stock market is notoriously unpredictable. Trying to predict short-term market movements is chaotic and often leads to more losses than gains. The volatility can be overwhelming, making it difficult to make informed decisions. But gold isn't your average asset. It has unique properties that set it apart from other investments. It often moves inversely to the stock market, providing a hedge against market downturns. Gold is driven by global economic trends, interest rates, inflation, and geopolitical events. These factors can significantly impact its value. Understanding these macroeconomic forces can give you a serious edge in making investment decisions. For example, during the 2008 financial crisis, gold shined as a safe haven asset. Its value surged while other assets plummeted. In times of economic uncertainty, people flock to gold. It's seen as a reliable store of value. It's tangible and has held its value for centuries, making it a trusted investment. Gold also acts as a hedge against inflation. When the cost of living rises, so does the price of gold. As the cost of goods and services rises, so does the price of gold. This makes it a valuable asset in an inflationary environment. It's like a financial immune system, protecting your wealth from economic instability. You don't need to become an economist overnight, but having a basic understanding of economic principles can be beneficial. Use tools and resources to stay informed. There are plenty of online platforms and financial tools available. Keep an eye on economic indicators like inflation reports and interest rate announcements. These can provide valuable insights. Follow reputable financial news sources to stay updated on market trends and economic developments. Check out the gold-silver ratio for clues about gold's value. This ratio can offer insights into market sentiment. Understanding the forces that drive gold prices can help you make smarter investment decisions. With the right knowledge, you can navigate the complexities of the market more effectively. Investing can be an emotional roller coaster. That's where dollar cost averaging comes in. It's a simple yet effective investment strategy. Instead of trying to time the market perfectly, you invest a fixed amount of money into gold at regular intervals. It could be monthly, quarterly, whatever works for you. Some months, when the price of gold is down, your money buys more gold. Other months, when the price is up, you buy less. Over time, this strategy averages out your purchase price. Dollar cost averaging takes the stress out of trying to time the market perfectly. It helps you build a solid gold position over the long term. It's like setting up an automatic savings plan for your financial future. Slow and steady wins the race. That's what dollar cost averaging is all about. You've diversified your gold holdings, timed the market, and are dollar cost averaging. But where are you keeping all this precious metal? Owning gold is also about protecting your investment. When it comes to storing physical gold, you've got a few options. Some people prefer to keep it in a home safe. If you've got a high quality safe, securely bolted down, that can be a viable option. But with home storage comes great responsibility. Make sure your insurance covers the full value of your gold. Consider a bank safety deposit box for extra protection. These boxes are housed in secure vaults within banks. For ultimate security, consider professional third-party vault services. These companies specialize in storing precious metals with state-of-the-art security features. Storing gold securely comes at a cost, but it's an investment in the preservation of your wealth. Choose the storage solution that gives you the most peace of mind. We've covered a lot today, but there's one more crucial aspect: taxes. Taxes can significantly impact your overall investment returns, and it's essential to understand how they work. Taxes are a fact of life, and ignoring them can eat into your investment returns. Whether you're investing in physical gold, gold ETFs, or mining stocks, each has its own set of tax rules. Understanding the tax implications of gold investing isn't rocket science, but it does require some attention to detail. Knowing the specific tax treatments can help you plan better. The rules can vary depending on where you live and how you're investing in gold. Different countries and even different states may have varying tax laws. In the US, physical gold is considered a collectible by the IRS, and similar in the UK by HMRC. This classification affects how your profits are taxed when you sell your gold. When you sell it for a profit, you'll typically pay a capital gains tax. The rate can be higher than the rate for other types of investments. Collectibles are often subject to a higher collectible tax rate than capital gains tax, which can be as high as 28% in the United States and the United Kingdom. If you're investing in gold ETFs or mining stocks, the tax rules can be different. Gold ETFs are usually taxed like regular stocks, which can be more favorable. Gold ETFs are usually taxed like regular stocks. This means you might benefit from lower long-term capital gains tax rates if you hold the investment for more than a year. Mining stocks can be more complicated, as dividends might be taxed differently. It's important to understand how these dividends will impact your overall tax situation. The best approach is to be proactive and consult with a qualified tax advisor. They can provide personalized advice based on your specific situation. They can help you navigate the tax code and optimize your investment strategy. This can save you money and help you achieve your financial goals more efficiently. By staying informed about the tax implications, you can make smarter decisions and maximize your returns. Knowledge is power, and understanding taxes is a crucial part of successful investing. Let me share a quick story. A friend of mine started investing in gold ETFs and mining stocks in 2020. By diversifying her portfolio and timing her investments, she achieved a 35% return in 2 years. Her key takeaway? Research and patience pay off. And there you have it. 5 strategies to maximize your gold investment returns. If you found this video helpful, hit that like button and share it. Don't forget to subscribe and hit the notification bell for more investment tips. See you in the next video.